Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at RVLV, or Revolve Group Inc. RVLV is an e-commerce fashion company. Here's the barchart.com technical opinion for RVLV. The bar chart technical opinion rating is a 100% buy, with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that RVLV is above the moving average line, so the monthly trend in RVLV is up. Now we're going to look at the daily chart. The stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started. So the daily trend is up. Since the monthly and daily trends are both up, RVLV is on our buy list. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. The RVLV stock price is below the upper Keltner channel line, so RVLV is inside the buy zone. Since the trend is up, we want to buy a call. RVLV has plenty of option chains to choose from. We're going to use the November 19 option chain. Right now, the November 19 options have 40 days to expiration. Here's the RVLV option chain for November 19th. RVLV closed at 68.95 on Friday. That means any calls on the list from 65 to 35 are in the money. Let's take a look at the profit potential for purchasing the RVLV 70 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 70 call is 6 to 630. We try to enter at the midpoint, so we'll use 615 as our buy price. Our call option calculator shows the profit potential for this call based on RVLV price changes at option expiration from flat to a 12.5% increase in price. We can see that if the RVLV stock price is flat at 68.95 at option expiration, the 70 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 60 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 60 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the RVLV stock price is up 1%, the 60 call will lose 19% of its value. We want that to be break even or better, so the 60 call does not meet our requirements. Let's see if the 45 call will work. The bid-ask spread for the 45 call is 23.50 to 25.40. We try to enter at the midpoint, so we use 24.45 as the buy price. The 45 call works. If the RVLV stock price is up 1%, the 45 call will make a 0.8% or $19 profit. That's better than break even, so the 45 call is the one we'll buy. The call option purchase calculator also shows that if the RVLV stock price increases by 2.5%, the 45 call will make a 5% or $122 profit. If the RVLV stock price increases by 5%, the 45 call will make a 12.1% or $295 profit. If the RVLV stock price increases by 7.5%, the 45 call will make a 19.1% or $467 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the RVLV stock price does not make the expected move up and remains flat at expiration, the 45 call would only lose 2% or minus $50 compared to the 100% or $615 loss for the 70 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the RVLV November 19 expiration 55 strike call and sell to open the RVLV November 19 expiration 65 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 55 call for $5.90 and sell the for $15.90 and sell the 65 call for $8.70. $15.90 minus $8.70 equals $7.20. So the entry price or debit cost for the spread is $720. The call option purchase calculated picture shows that the spread will make a 38.9% or $280 profit if the RVLV stock price declines by 5%, remains flat, or increases in price when the options expire. If RVLV declines by 7.5%, we will make a 21.9% or $158 profit. Creating the debit spread will allow us to collect an $870 cash credit to our brokerage account for the sale of the 65 call. As we said on the previous slide, this reduces the cost of entering the spread to $720. Here's a note regarding earnings reports. The next RVLV earnings report is scheduled for November 3rd. That's before these options expire. Let's review the trades one more time. First trade was a call purchase. Said to buy to open the RVLV November 19 expiration 45 strike call for $24.45. We also reviewed a spread. Spread said to buy to open the RVLV November 19 55 strike call and sell to open the RVLV November 19 expiration 65 strike call at a debit of $7.20. That's it for this week's optioneering workshop. Thank you for joining us. We look forward to seeing you again next week.